Brilliant, thanks Eloise. Well, I'll just briefly touch on two of the products that are mentioned in the panel debate, and then I'll give a very quick business update. So there's a lot of chat in the panel debate there about green mortgages, and just wanted to give some clarity to the Kensington offering. So like I mentioned on the panel debate, we've taken a slightly different approach to a lot of lenders. We believe that the biggest opportunity and the biggest challenge for climate is the existing properties. So 25% of emissions in the UK come from properties, and they're not coming from the A and B new build, they're coming from all the existing properties, especially I mentioned things like the Victorian terraces. So what we want to do is incentivise and reward customers for improving those, because we think that then actually helps the whole climate debate. So the way our mortgages, our green mortgages work, when a customer joins us, we get an EPC, whether that's a remortgage or a purchase. If in the next 12 months that EPC improves by 10 points, now 10 points doesn't mean you have to jump a band, you don't have to go from a D to a C, you could actually stay within a D. There's all the different bands A to G are made up of 100 points in total. So if you get 10 points, which could be you jump a band or you could stay within that band, we will give you £1,000 cash back. And you can see the grid there on the screen. To get your 10 points, you could insulate your hot water and get some low energy lighting. You could do loft insulation. So there's lots of different options, but that will get you £1,000. And we think that's the right thing to do, because then that has actually made a change to the climate footprint rather than rewarding people who are already living energy efficient houses. Now, having said that, our new build eco reward, because we didn't want to leave new build out, does work in a more traditional way on A or Bs for new build only, and those guys get a cash back. But our main focus is the existing properties, which we think is the big climate challenge. So that's where we're focusing, and there's been a huge amount of interest, and we think customers will continue to be interested, because especially at the moment it's very expensive if you have a property that's not energy efficient, because we all know bills are going through the roof. So we expect the interest in this to grow and grow. So that was the first thing, was green mortgages. Second thing that I touched on in the panel debate was our newly launched last month FLEXI fixed for terms. This is our long-term fixed products. So these products go from 11 years to 40 years. They go all the way up to 95% loan to value, up to 90% on new build. And the key benefit for this is that we can give really good affordability, because we don't need to apply the stress rate, because the rate never changes. So we don't need to imagine, well, can the customer afford it when they go on to the standard variable rate, because there isn't one. So the rate they start on is the rate they finish on. So that means we can go up to 6 times income for first time buyers. So you've got 6 times income at 95 LTV, gives customers a really good opportunity to get on the housing ladder. And where the feedback, we've had some brokers, we've had quite a few applications, we've had a few offers now, so it's kind of moving through the pipeline nicely. The feedback we get from brokers is this helps expand the market, because this is for the customer that comes and says to you, there's a certain property I want to buy, and then you look at everyone's affordability calculators and say, well, I just can't lend you that much. You're going to have to come back in 6 months or a year, and you've saved up some more money, go and talk to your family, friends, try and get some more money, find a different way to do it, but I can't help you today. This is the product that hopefully grows the market, because you can say, well, actually, I do have a solution, because this will go to low deposit and high affordability. So I think that's the real sweet spot. There's also customers who want to just lock in, and they're worried about interest rates going up. I mean, the Bank of America, the Fed in America is looking at 5 interest rates. We think this year we're going to see something similar quite quickly in the UK, I think, fairly soon. So people are also interested in locking in at historically low rates. The early repayment charge, which obviously is everyone's worry if they're locked in for 20 or 30 years, are very flexible. The only time you would pay the ERC is if you remortgage and stay in the same property. If you move house, you don't have to pay the ERC. You can port it if you want, but you can remortgage to someone else and you don't have to pay. If you can even pay it off with your own funds, as long as you're not remortgaging. If you win the lottery or get a big bonus with a huge amount of savings, you can pay it off. So it's very, very flexible. We give an enhanced prop fee. We know there's potentially a bit of extra work with this, because you have to do more illustrations, because you're comparing a 30-year to a 10, to a 5, to a 2. So we do give a 75-bit prop fee for the extra work. And the pricing is pretty competitive. The rates start about 3%, and even at 95, they're still below 4%. So it's not like you're having to pay a premium for having that long-term fix. the 95 is actually about 150, about 1.5% cheaper than R2 or 5-year 95 LTVs. They're very flexible and very good value. And like I said, the portable. So definitely something to be aware of. It's we think it's a way of growing the market and bringing in new customers, especially first-time buyers who are currently kind of locked out because they just can't get on the property ladder. And then the final thing I just wanted to mention was just an overall Kensington business update. We have had a fantastic 2021, as I'm sure all of you have. Great to see record levels of customers using brokers. They clearly value the advice and that whole market approach they can get from brokers. So we've had record levels of business, so thank you all very much for that. We're giving out brilliant service at the moment, so we are on a one-day turnaround and have been for about a month now, and we're planning to stay there. So that's a 1 day for post, and that's also a 1 day for day one underwrite. And how we've done that is we've grown our underwriting teams massively. So we doubled the underwriting team last year, and we're on course to triple it by about the time we get to the middle of this year. So huge investment in capacity in our business to serve brokers better, which is how we get to a 1 day service. And we've also grown the BDU team, got 40% more people in the BDU team, 40% more people in the pre-offer team, so we can handle your calls better and make sure we give you really good, fast service. Our BDMs are available now. The working from home guidance has gone. They are happy to come to your offices. They are happy to, you'll see them at events. If you still want to do a Zoom, we can do a formal Zoom meeting with you where we share screens and show your dashboards and data. But whatever works for you, we will. That's how we'll work. And the final thing I just want to leave you on is we've talked about some of our innovative products today, our green product. We had our Heroes product at the start of the pandemic. We've got the long-term fixes. What we want to be known for is product innovation, and that is our plan in 2022. We don't want to just compete with competitors. We want to grow the market, bring more new customers in that grows the market for brokers. So we've got lots more product innovation coming down the track. So please look out for that.